Hey traders, welcome back. We're talking candlestick patterns. In particular, in this video, we're talking about the morning star, which is a candlestick pattern that happens at the end, supposedly, of a downtrend. It's a bullish reversal, bullish sign to give us a hint that perhaps bears have lost control and we're going to start chugging up. So let's draw the pattern in the way the textbooks show it. I've got my iPad here. I'm going to do exactly as the textbooks say. Then we'll analyze it, we'll work out exactly what it means for us as traders, the psychology behind it. We'll sort of put my flavor on it as well and see when I think I like to use it, and also what the official, in inverted commas, line is. And then we'll kind of go from there. So we have this scenario. We have a good downtrend move, a proper classical high to low downtrend move. The next day, now I think I've got it on Investopedia. They are saying that we've got a doji down here. Now, I'm not sure it has to be a doji. I would say any small body candle, but let's go with a doji on there. And the next day we gap up and we have a nice strong uptrend candle. And I'm going to color them in the standard form of if we've got a close below the open, it is red, and vice versa. We've got to close above the open, it's green. Obviously it's going to be depending on what you've got strategy, so what setup you've got with your what setting should I say you've got with your own particular chart package. But that's generally what happens. Okay, that's pretty much how I've got it. I think I got it spot on there. If you know of any way different to do it, then let me know in the comments below. Let's talk about the logic behind it. First of all, let's put some numbering on this. There's 1, there's 2, there's 3. Okay, so the theory is we've got a good downtrend, big blasting move, aggressive move to the downside, and this is like number 1, which is, if you looked at that from there, you'd say, okay, continuation, just bears are in control, sellers are more aggressive, they're hitting those bids, causing the price to move lower, standard stuff. We then get to day 2, and this is the important part, is we have a gap. In other words, we gap lower. So it looks like a continuation gap. Everyone's thinking, this is still very bearish, but in actual fact, you can't read that very well, can you? That's number 2. I've marked that as number 2. You actually get a doji, or a very thin body candle, and I'm going to just make it as a thin body candle. Whether that's right or wrong, correct me if I am wrong. The official line, guys, I don't mind being corrected on this one, or what the official thing is, but really I don't think it matters so much. The important part is this gap point, and then this next bit we'll talk about in a second. So the gap lower, sellers are in control, yes, no follow through. No sellers are thinking, hey, you know what, this is great value, I really want to push it lower. And they're just holding back. And then day 3, you get a gap up. And that gap up is bulls saying, I think this is value now. Here is my demand. I'm stepping up to the plate. And they do a classical trend day, low to high, giving us that long candlestick. So the morning star pattern is those 3 candlesticks moved as one. I'm just confirming on here. They call it a downtrend reversal pattern. You get the large down candle, a doji representing indecision. Again, I'm not sure you have to have a doji as such. A thin body makes sense to me, but yeah, indecision, I agree with that. And then a long white candle represent buyers taking control. All good, that makes perfect sense. Let's have a look at that on an intraday perspective, how that would look. So day 1 here is a classical trend day from high to low. Yes, we might have some sort of action above giving us these tails and wicks, but in general, you're gonna have that thick red body that literally represents a solid trend day, aggressive sellers in control, decent range on it, reasonable volume, the sort of attributes you'd expect from that kind of thing. Day 2, you get the gap lower, confirming weakness, looking very, very weak. And then maybe you get this kind of scenario, just sitting there, closing very, very, again, within a tight range. The close and open are very, very tight. Doji, small body, same kind of thing in my eyes. Looks okay. So you think, okay, maybe it's just taking a breather for a next leg lower. Shorts are probably really heavily involved in this now. Some buyers have stopped it. Maybe some sellers have backed off. Maybe some buyers have stepped up. It's either of those, isn't it? To get that equilibrium, you either have to have sellers backing off or buyers stepping up, or a mixture of both to get the equal. And then you get the gap up. And that's when people probably get a little bit twitchy, shorts are panicking a little bit. And then when you get the high to low move, the low to high proper classical trend uptrend day, from an intraday perspective, day 3, that's when you've got the finalization of the pattern. Sellers are probably thinking, all the guys who have been shorting it here are covering. If you've been in the downtrend, you're probably thinking this may be the end of it. And the idea being that you go long. I guess this is what the textbooks are probably going to tell us, and it makes perfect sense to me. I might want to be a bit more aggressive personally with how I would trade this, but it makes perfect sense if you're trading just on this morning star pattern. Your long is on the close here. Your stop is probably going to be either on the low of this candle here, or maybe below the prior low of that indecision candle. They both make perfect sense to me. In a day, stop is about telling you when the premise of the trade is wrong. Where would I like to see that? Well, textbooks telling us that it's on the downtrend, a good drive lower, it's at the bottom of the trend, and it's a reversal. For me, I think it's perfectly valid to say if it's on an uptrend, on the pullback of an uptrend, to get this kind of pattern. So, you've pushed up, you're pulling back. There's your pullback candles, if you can make that out. Then you get that. Then there might be a trigger to then go long in the uptrend. Or equally, as it's mentioned in many of the kind of big sites, is that you take it at the bottom of a trend. I would be very cautious that you're not too early on the trend with this kind of thing, because just on its own, it doesn't really do the right thing. But like with all these patterns, depends on how they're put into perspective of what's happened before that. But if you've had 1, 2, 3, 4 kind of moves, counter trend moves, and then you're getting this at the lows and you're getting some good volume, it's probably quite a good trade. Anyway, let me know in the comments below what you think about this morning star pattern, if you use it, if you don't use it, if you've got a little different take on it, how you adjust it to suit you, what stocks, what markets you think it works in the best. Would love to hear your comments on this pattern. If you like this video, give me a thumbs up. And if you haven't already, please subscribe, because we've got loads more videos coming up the next week, the next months, talking about patterns, talking about setups, strategies, discipline, psychology, all that kind of good stuff to make us better traders. Good trading out there, guys. See you on the next one.